I'm going to be providing an equity capital markets update. So briefly about IATI Wainwright, we're a boutique investment bank focusing on the life science space. We do serve some non-life science sectors, but mostly life science companies. A full-service investment bank, from capital markets access to non-deal roadshows, aftermarket support. You can see on the slide to the left. To the right, a little bit about our activity. Considered to be the most active investment bank when it comes to small mid-cap life science financing. Just this year, we closed to 50 transactions and $1.5 billion in a couple of months. Last year, over 300 transactions and about $13 billion in gross proceeds. Many of them are Israeli companies, as noted. This is just a graphic representation of our activity, both from number of deals as well for gross proceeds that were raised. To the right, in green bar, is the research coverage. Number of companies that we provide research on a daily basis. Again, very big representation for Israeli companies for many, many years. This is just sampling of some of the names, and with that I will stop the self-marketing and move into the actually capital markets update. So looking at the market, obviously we're looking from a macroeconomics and then life science specific. Still, there is a worry on the persistence of inflation, a phenomenon that we have suffered for the last couple of years. And as I indicated, the tariffs remain unclear. When we wrote this slide, it was unclear. Now it's more clear that Donald Trump and the administration is very serious about that, and obviously will have effect on the markets. Overall, the market in the US, however, is strong and resilient, both from unemployment and GDP growth. And we started to see something that we're happy as a small mid-cap banker, is to see rotation from the large cap into the small and mid-cap, indicating the higher valuation of large cap and the undervalued asset in the smaller cap. When it comes to life science specific consideration, we didn't see a robust M&A activity at the beginning of 25 around the JP Morgan conference. So we believe that there's going to be more M&A to come, which will return capital to investor that will, in return, will redeploy it into the market, which brings some level of optimism. Again, the investors are flushed with cash and they are looking to deploy it. They're very data-specific, data-driven financing. I'll show you some data about the recent activity that suggests a separation between the small cap and the large cap, which is both a reason to be optimistic and concerned. So the biotech as of March of 2025, mid-cap compared to small cap, and just to put numbers, small cap is half a billion and below, billion below mid-cap, 1 to 10 billion. The mid-cap is overperforming the small cap. Again, it's relevant for Israeli companies because unfortunately most Israeli companies are in the small cap space, making it more challenging to attract investor attention. But again, overall, we are optimistic about the prospect of the year as investors start to move downstream on market caps. Here, just chart representation of several indices. Obviously, we have S&P 500 and NASDAQ. The upper chart is the last 12 months of performance versus the lower, which is the year to date. And if you go back to the last couple of years, where NASDAQ did 25% back to back, life science underperformed, as you can see, top right, negative 12.6% for the XBI compared to NASDAQ, which was up 15.8. However, year to date, they're about neck to neck with XBI, which is, again, life science indicator, is actually overperforming NASDAQ by 0.9%. Supporting the hypothesis that there is a slow return from the large cap tech sector into the small cap life science. I showed this chart last year, and interestingly enough, by number of life science traded companies, there was a drop of about 5%, meaning that about 5% of the sector either went through bankruptcy or delisting. We had close to 800 companies last year, down to 735 today. 78% of these companies are trading below $250 million. That's up from last year where we were at 74%. So more pressure on the life science sector. And when you look at the numbers for cash on hand, which is suggesting how much money they have today and when do they need to go to the market to raise money, there is an increase in the number of companies that have 12 months or less cash on hand compared to last year. But between 12 to 24 months, the number has decreased. And actually, we see more companies that are profitable. So there is this segmentation of small cap, underfinanced company looking for capital, profitable, advanced stage that are properly financed. When looking at numbers, standing here last year, we had a positive prospect for 24, and we were correct in our assessment. The total amount raised for life science companies in the US across all geographies went from $35.7 billion to $49.4 billion. In not that much too many transactions, 273 compared to 233. So there were more deal activity, raising more money, which support what we saw on the previous slide, more companies that has two years cash on hand or more. When looking at the type of transaction, again, we had a lot of private placement, not so many public offerings, which again support the hypothesis that the institutional side is bullish, they're looking for opportunities, and they're ready to deploy cash very aggressively. When looking at 25, that's the part that we have some basis to be a little bit concerned, because comparing the year-to-date of 25 compared to the same period of time last year, we have less deal activity, both from number and amount raised. So we will need to monitor the progression of the sector a long time and see. Okay. So we'll need to monitor the sector. This is essentially similar data showing the 21 to 25. IPO sector, that's one part that is very relevant to private companies, Israeli companies. IPO sector last year was underperforming. Out of the 19 IPOs, only 4 performed well and made returns to investor. That will be a key indicator for the sector in 25. We do have 5 IPOs on deck, and we'll monitor them very closely. That's the life science window in 25, as I said, talking about the IPO, mixed performance by the XBI, the return of secondary offering to support these companies that are 12 months cash on hand or less, and we will be there to support the sector and Israeli companies, and with that I will wrap it up, so thank you.